What the Bitcoin halving means for BTC mining centralization. There are concerns that the halving may be bad news for mining decentralization. Industry experts are concerned the upcoming Bitcoin halving could lead to increased centralization. The fear is the reduction in block rewards will make older mining equipment unprofitable, concentrating hashing power in the hands of fewer miners. A trend toward mining pool centralization on the Bitcoin network has been clearly observable over the past few years, but the halving is expected to further exacerbate the issue and accelerate the trend. Historical data gleaned from BT.com shows that from 2016 to 2021, on any given 3-day period, the top 2 mining pools controlled around 30 to 40% of the hash rate. Hashing power is far more centralized lately. On February 28, the top 2 mining pools, Foundry USA and Antpool, controlled almost 50% of the network's hashing power, according to CoinDance. Data shows that 26.55% of the total blocks have been mined by unknown or unaffiliated sources since Bitcoin's inception. Mining pools, such as F2 Pool, mined 10.11% of all blocks over that period, while Antpool mined 10.2%. The problem of centralized mining. Jesper Johansson, founder and CEO of venture capital firm Northstake, is one of the figures predicting increased volatility for BTC mining, leading to increased centralization. As for why this is a problem, Johansson highlights 2 main areas where challenges may arise, undermining Bitcoin's decentralized credentials. First, with significant control over the mining process, centralized entities might have the undue power to censor transactions by choosing not to confirm them, which conflicts with Bitcoin's ethos of decentralization and censorship resistance. Second, centralized mining pools could exert disproportionate influence over decisions regarding Bitcoin's protocol updates or changes, potentially skewing development in favor of their interests rather than the broader community. Bitcoin researcher Chris Blurs has long been sounding the alarm on centralization. As Blurs argues, centralized mining creates numerous risks for BTC, including the potential blacklisting of certain products, such as coin joining services. Censored Bitcoin. The argument of whether Bitcoin centralization will lead to censorship may be a moot point, as existing research has already uncovered one mining pool filtering or censoring some transactions. It's worth remembering that even if one mining pool filters out a transaction, that does not stop the transaction from being processed, but it does potentially result in that transaction taking longer to process. Pursuing profitability. While the halving of block rewards may make mining less profitable, some scenarios could offset the reduction in income. The simplest of these scenarios would be if the price of Bitcoin doubled against the US dollar. That may be too much to hope for, but there are other potential avenues for pursuing increased returns. As Acheron Trading CEO Laurent Benayoun told Cointelegraph, miners already have more than one way to make a profit. Dealing with centralization. There are many ifs and buts when dealing with the issue of hashing power centralization, but if the rising price of Bitcoin and transactions doesn't absorb the decrease in mining rewards, further solutions may be difficult. According to Johansson, any drastic proposal to mitigate the issue would undoubtedly face serious opposition from Bitcoiners. Ultimately, even if the halving causes a few additional bumps in the road for miners, the only realistic choice will be to ride it out. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.